Hello, welcome to Jhin Seok Stock Talk, and today we'll be going over stock movement. The first thing that we'll be covering today are earning releases. So, what are earning releases? So, every company provides quarterly earnings, which is a pretty much like financial summary of the company's last 3 months, which are quarters, obviously, of the year. And analysts can use this as a tool to gauge like the financial health and like the status of how the company is moving. Financial reports come through multiple different ways. They have earnings per share, earnings from continuing operations, and net sales. Earnings per share is something that I've covered, I think, last video or 2 videos ago. And obviously, these reports can either help or hurt the company. When the earnings report doesn't meet the expectations, um, the market of that company can get affected. And these reports provide income statement, a balance sheet, and the cash flow statement, which are just all um, pretty much like I said before, the financial health of the company. Now, interest rates and the Federal Reserve. Interest rates and stocks have opposite effects. As interest rates go up, meaning it costs more to invest, share prices are going to fall because obviously who wants to pay more when they don't need to, right? So obviously, if the interest rate is going to go up, the share price is going to fall because not many people are going to want to buy that share anymore. And the opposite is true. As interest rates go down, share prices also rise. Now the Federal Reserve, when the Federal Open Market Committee (FOMC) changes the interest rate, this can be done through conferences or just public statements. The economy and stock markets are impacted either positively or negatively, depending on the announcement that the FOMC makes. Earnings call. An earnings call is a conference call to discuss the company's earnings during a certain period. This is usually done in like a public space with an audience, and just like I mentioned before with the quarterly earning reports, earning calls are another tool that analysts use to figure out the financial analysis of a company. After the public conference call, people that are watching the call or watching the conference can ask questions, and these questions can either enhance the company's image by if they ask a question that is for the company that'll help them build a better background of the company, or it can harm the image if a person asks a question that maybe the information is not ready to be shared to the public. People are going to be skeptical if the company just decides not to answer a question. Next, market timing. Timing the market is pretty much unrealistic. However, there are certain things that you can do to help give you an advantage on the market, but no one can time the market because you don't know how the market's going to move. No one really knows. And I think there are three basic understandings of market timing. They're studying long-term cycles, which can be like 6 years. Like let's say, what I mean by this is, you know what? Let's do an example. So here, I'm gonna be drawing out an example. Let's say this is, let's use Tesla again. Tesla, and this is not exactly how the information or the financial data is, but I'm just gonna make it up for this. Let's say Tesla had a very steep increase and decrease over the. Let's say this is 2020, and this is 2022. These are not real data, but I'm just trying to use it as a just as something to like represent and help you visualize what's going on. So obviously, okay, you know what? Let's change this. Let's say this is 2016. This is a 6 year gap. Now, what I mean by long term cycles is you should study what happened when and why that happened. So during the 6 year cycle, why did it boost and why did it obviously fall, right? And if you can figure that out for a company, same principles apply to most companies, but Studying these long-term cycles is going to be helpful for you because being able to learn these trends on why and what happened to make the stock price drive up or drive down is going to be one of the ways to learn how to time the market. Another way to time the market is watching the calendar. So what I mean by this is, um, I think the main thing I'd take away from that is quarterly earnings, like I've mentioned earlier in this video. Uh, if a company were to announce, so let's say um, company announces a quarterly earning, you should be able to you should figure out when the date is, what day that they're releasing their quarterly earnings, and um, depending on what they announce, is going to be very correlated to the price of shares. Final thing is understanding the trends. Now, the final thing to understand about market timing is understanding the trends. So, what I mean by this is being able to anticipate trends and understanding what trend the market is in as bull or bear markets is going to be very important to how you invest your money into the stocks that you're looking into. However, like I said before, it's very difficult to time the market, and trying to time the market and failing is can lead to significant losses because you might think this whole system that you have is correct, and you put a lot of money into it, and if the timing is not correct, well, all that money is going to go to waste. And finally, we have IPOs. IPOs are initial public offerings, or when stocks of a public company are sold for the first time, and the money that they get on sales is going straight to the company off of IPOs, and this money that the company gets is put back into the company. However, when stocks are rebought and resold, that is called secondary distribution. That's when stocks that are traded, which were previously owned by stocks that are traded that which were previously owned by someone or a party that was not the company. Why is the difference so important? IPOs allow a company to become public, allowing them to make money off the traded shares, um, and like I said before, put money back into the company. However, secondary distributions are able to promote security and ensure that the shares that are traded are real. I guess is a good way to put it. And this is a Google form that I'm going to be putting in the description of my video. It's a very short Google form. I just want to understand if my videos are entertaining or helpful. Um, and it would be very nice if you guys were able to fill that out. It'd take 5 minutes at the most. Thank you so much.